Becoming a successful investor can be tough, especially if you're unable to predict the market. However, Ray Dalio, a veteran global macro investor with over 50 years of experience, has done extensive research on economic history spanning 500 years. In this video, you'll gain insights into how past events have impacted today's market and economy. This knowledge will help you better understand and forecast future challenges. Over the course of his career, Ray Dalio has observed that unexpected events often catch us off guard. To mitigate this risk, he conducted research on 500 years of economic history. Through this research, he discovered patterns that emerged as a result of economic turmoil, societal change, and international conflicts. As the co-chairman and co-chief investment officer of Bridgewater Associates, Dalio's findings can help you make more informed investment decisions in the face of uncertainty.
The study, I needed to understand things that were happening to us. I'm a global macro investor, and there are things that are happening in our lifetimes that never happened before. The amount of spending, financed by debt.
Ray's latest book, Principles for Dealing with the Changing World Order, draws upon his extensive research on economic history, which has also informed his insights into the current state of affairs. He recently spoke on the Davos Meet the Leader podcast at the 2022 World Economic Forum annual meeting, where he shared how knowledge of the past can help leaders navigate the present and anticipate future challenges. Ray's research has revealed that many of the surprises he encountered in his lifetime have been recurring events throughout history. These include the monetization of debt, which is contributing to inflation and other issues. Additionally, he notes a growing divide between left and right-wing populism, driven by wealth and value disparities, and the significant impact of this internal struggle. Another key factor is the global power struggle, as seen in the Russian-Ukrainian conflict, the rise of China, and the relative decline of the United States. This has led to various conflicts, including economic sanctions that occur during great power competitions, when there is no global court or justice system in place. Ray's insights are invaluable for leaders looking to make informed decisions in today's complex world. By understanding the recurring patterns of history, we can better navigate the challenges ahead.
Right now, the U.S. is imposing sanctions. Sanctions it's a form of economic warfare, and it has a big implication for the dollar, right? Okay, now others are trying to get out of the dollar system. There's a dollar system that now is being changed.
To better understand the impact of economic sanctions, we can look to a similar situation that occurred in Japan when the United States froze Japanese financial assets and imposed sanctions on oil imports. Imagine if China faced similar sanctions. Since they account for 22% of the U.S. imported manufactured goods, it would lead to inflation and shortages, as well as tighter regulations such as capital regulations. This situation highlights the internal divisions that existed during World War II and ultimately brought down several democracies. Today we are seeing a greater allocation of ideological or political resources, leading to problems such as trading limitations, currency exchange restrictions, and reduced economic efficiency. By understanding these historical patterns, we can anticipate future challenges and the potential impact on the economy. Ray's research has shown that conflicts between opposing parties often establish a new domestic and global order, with power shifting to the victorious side.
Amount of internal conflict, the rise of great power in the form of China to challenge the existing world order, and so on, the alliances with Russia and all of that.
The global economy goes through cycles of improving living standards and wealth. However, this also leads to widening wealth inequalities and increased debt. Those who have more money tend to have more power and can support their offspring better. This creates three common occurrences: excessive debt, financial loss, and a decision between depression and inflation. Usually, more money is printed, leading to inflation. This has happened throughout history, including in 2020. When this occurs, populism can arise, leading to incompatible contrasts and confrontations between countries. As the dominant power at the outset of a new world order, a country has a significant advantage, but this advantage decreases as other countries catch up, leading to more competition and obstacles. Ray discusses how these economic conditions can impact our lives and the government's inefficiencies. As we move forward, it's essential to consider how our lives may change over the next several years.
What's happening now is very relevant, is a guide to The past is a guide to what's happening now. 1971 led to the inflationary period of the 1970s.
Undoubtedly, inflation and inefficiency will reach even higher levels. During the coming years, this could show up as more severe supply chain problems. You would not be able to transfer money outside of your own country, which may be the US or another nation, if there were capital restrictions in place. Alternately, there can be restrictions on the methods you can use to send money abroad. We originated from a culture where money, goods, and services could flow about freely, sort of a world is flat environment. Resources are dispersed in a world without these things based on the flow of money and equal opportunity. The possibility of military action must be considered. For instance, there is a crisis in Ukraine, and it may escalate in a number of ways, including militarily, nuclearly, or in other ways. We're going to find out more about this over the next few months. The second thing we will discover over the next months is how effective punishment is. Can sanctions, which are currently the United States' only unique military advantage, because it is no longer the world's leading military force in the same way, have the desired effect of halting or preventing a Russian victory? How will that affect how other countries behave? Lastly, we will examine the alignment of the various nations. There are usually allied and axis powers, as I already stated. We can already see this based on who is joining and why, and we will soon see how much pressure the US puts on other countries to pick a side. Right now, there are more discussions about picking a side. However or another, you will have to pick a side. Thus, we will keep an eye on how those teams are selected. Everything will start to make more sense within the next 6 months or less. What concrete action can investors like you and I take to make the most of these historical trends and precedents and successfully navigate this new dynamic world? Investors can lower risk by combining assets that are uncorrelated. Dalio is a big fan of diversity. To reduce your risk-to-return ratio, he expressly suggests diversification over 15 or more uncorrelated investments.
I'm big on diversification.
You're very big on
It's
diversification.
like knowing how to diversify well is more important than almost anything. People don't understand this.
Is that an evergreen principle, you think?
Yes, that's an evergreen principle.
Interesting.
And the reason I'm saying that, the way it is, it's almost like a casino making its money.
If assets are not related, they won't move in the same direction, whether it's up or down. For example, gold and the S&P 500 don't have a strong connection, so if the S&P 500 goes down, gold prices might not be affected. Bridgewater portfolios have a variety of assets, such as different industries and currencies. Ray Dalio, the founder of Bridgewater, also uses cryptocurrency as a way to diversify. Additionally, he believes that it's better to sell expensive stocks to make a profit rather than holding on to them. He rotates his portfolio frequently, and he thinks undervalued stocks are great investments because they represent companies that are doing better than their industry or the economy as a whole. Lastly, if you're a subscriber to his channel with notifications turned on, you'll get updates on his investing strategies. The list of top 11 stocks includes Cisco Corporation, Starbucks Corporation, and surprisingly, the Coca-Cola Company, which has been a reliable option for long-term investors, such as Warren Buffett since 1988. The stock has a low beta and can withstand economic storms, making it a great addition to any portfolio. Being a long-term investor is also beneficial, as demonstrated by billionaires like Charlie Munger and Ray Dalio, who are among the highest-paid people on Wall Street. The list also includes HCA Healthcare stock, iShares Core SP 500 ETF, Procter & Gamble Company, iShares Core MSCI Emerging Markets ETF, Johnson & Johnson, PepsiCo Incorporated, Vanguard FTSE Emerging Markets ETF, and Walmart Incorporated. Investing in these stocks for the long term is less volatile and increases the chances of surviving market downturns. Ray Dalio is not an ordinary billionaire who gives his views on the economy and stock market. He is the co-chief investment officer of the world's largest hedge fund, and he believes in the power of action over just talking. According to him, becoming a wiser investor requires having a diversified portfolio and being aware of your guiding beliefs. He calls this a recipe for decision-making, which can help you navigate difficult economic situations and achieve your financial goals. Dalio emphasizes that the economy experiences cycles, much like other aspects of life, and being able to see and understand these cycles can help you cope better with them. He likens this to a doctor seeing the same thing repeatedly, which provides them with the necessary perspective to deal with it. Dalio believes that understanding your flaws and successfully overcoming them is the key to success in both financial and personal matters.